All right, welcome back to class. This is financial management, working capital management. Specifically, that's what we're going to be looking at. As I've said in my previous class, this is going to be the second class for working capital. I was supposed to have been done with working capital last class. So I had to go and feature out some other questions that are likely to be examined in case working capital would come out. So we're going to solve as many as we can solve today. Okay, we're going to solve as many as we can solve today. This is just for you to have a broader understanding of working capital. So if you're in my last class, glory be to God, you will flow with me. If you're not in my last class, maybe you studied it on your own or you've attended classes somewhere else on working capital, you should also flow with me also. All right, so this topic is in your FM, this topic is in your SFM, and this topic is in your PM. So for skill students, you are killing two things at a time. You are killing working capital for both FM and PM. For professional students, just for SFM directly. All right. So I will not be finding time to do those revision part of it again. Just watch my previous video. So this is going to be the part 2. So I'm going to be looking at this particular question. And if you check this particular question, what we have here, it says, calculate the amount of working capital required by the company. Calculate the amount of working capital required by the company. Now, the previous question that we have solved told us that we should calculate working capital cycle. If you remember, the previous questions we did was calculate the working capital cycle. So that means that it is not all situations that ICAN will always demand you to calculate the working capital cycle. And you know, when we're calculating working capital cycle, our answers are usually in days, months, or weeks. But in today's example, it says calculate the amount of working capital required by the company. You know, working capital is the money we use for running day-to-day activities. So we want to know how much do we need to run this company's day-to-day activities. Therefore, our answer in this one should be in currency, either in Naira, based on the question, in dollar, in pounds, or in CFA, depending on the question. So this is another way that a working capital question can come. Calculate the amount of working capital required by the company. We're going to do that in A. Okay. Then B is purely theoretical. It says, list the various methods of financing working capital. And finally, there was an important note given to us here. It said, assume 360 days in the year. All right. Assume 360 days in the year. So let us digest this question and let's solve. It's no big deal. All right. So Agile Nigerian Limited is a new manufacturing company that is to engage in the production of shoe soles and leather works. No problem. Now, the company budget for its first year of operation is as shown below. Now, what is the budget? The company budgeted that they are going to make sales worth 3.6 million. For them to make these sales, they will incur direct material worth 1.2 million, direct labor worth 900,000, and overhead worth 600 million. Okay? The total cost incurred will be 2.7 million. And that means 2.7 million taken out from 3.6 million. It means that they're going to make like a gross profit or a contribution of, let's say, 900,000, if the case may be. Now, you are given the following additional information. This is where the whole game changes, additional information. Please, I want you to pay attention here. You need special attention to understand this. They are very, very simple. Now, the first additional information is stating that, number one, it's a debtors. 40% will pay within 30 days of sale. The next 40% will pay within 45 days, and the balance within 60 days. This particular statement is familiar to a cash budget. For those of you that have done cash budgets, you usually see this kind of statement. So you can also see them in working capital question. So what they're trying to say under additional information one is that your total debtors, which I don't know, okay? But you should know that when we talk about debtors under working capital, we are referring to sales because the sales will be assumed to be credit sales. It's a silent assumption. It's a silent assumption. So when you hear the word debtors, don't be looking for the figure. The figure there is this sales. A silent assumption. Except where the question told you, okay, that there's a portion of credit sales. But if not, assume that the total sales is credit. So what we are trying to say is that These 3.6 million are all sales on credit. Okay, they are all sales on what? On credit. So what do? They say 40% of 3.6 million we pay in 30 days, that is in 1 month. Why the remaining 40% will pay within 45 days? That's about 1 month, 1.5 months. Why the balance? What is the balance? 40%, 40%. Now the balance is 60%. So the balance of, okay, the balance should be 20%, 40, 40, 80. So the balance of 20% will be paid what? Within what? 60 days. Very, very simple. I'll tell you what to do with regards to that. When you calculate for that, you will now know how much your actual debtors would be. Okay? Now the next one is saying raw materials will be in store for 36 days on average. Now, what it means is that your raw material will be in your store. When I mean store, I mean where we store raw material. You know, we have store of raw material and we have store of finished goods. So that store that will keep raw material are waiting to be taken to the production department. Raw material will stay there for 36 days. That is more or less like saying raw material inventory turnover. You understand? 36 days. I'm going to tell you how to treat this. It's very simple. This question is not even a challenge, but it's examinable at FM. Now, work in progress. It says what? The production cycle will be 72 days. I told you in my last class, another word for...
Sorry, sir, you're breaking at some point. I don't know what's causing that.
Work in progress. The production cycle, I believe I'm clear now. I don't know, is this a general challenge or is just your challenge? Hello?
I can hear you, sir.
Is this a general challenge or just our own challenge? That's what I'm asking.
It is only how we can hear you.
You people have allowed me to go and change all my headsets. My students, they will tell me they don't hear me. My 8th student will tell me that it is very perfect, it is clear. I've changed my jacket, I've changed my earpiece, I've changed my AirPod, spending money, changing. So I don't know where the issue is coming from. And I'm using an HP laptop for Wi-Fi. So where is the issue coming from? So please, sometimes it can be network. The earpiece I'm using is a new earpiece for this class. Okay, well, please just let me know when you can hear me. Maybe it can be network. If it's general, that means to say it's from my end. Maybe my network checked, something like that. All right, so let's go ahead. It said work in progress. The production cycle will be 72 days. Work in progress is the same thing as production cycle. So when they say work in progress, production cycle, that is to say the work in progress will be what, 72 days. Now, what it means is that goods that have already been started, that we have started working on, we spend 72 days in work in progress before they become what? Before they come into finished goods. You know, the stages of production is that you're going to start with your raw material, then you move into work in progress, which you call WIP or production cycle, and then you now move into finished goods. So when we say work in progress is 72 days, what it means is that the product will stay in work in progress. You'll be converting the product, you'll be working on that product for 72 days on average before the product becomes what? A finished product. That is what it means. Am I making sense now? Then the other one is finished goods will be in store for how many days? For 45 days on average. Now, when we say finished goods will be in store for 45 days on average, and what it means is that the finished goods will not be sold, or on average, our finished goods will stay in our warehouse for 45 days before we are able to sell them. That is what it means. So if you have a product, maybe you produce bottled water will stay in the warehouse for at least 45 days on average before you can sell them. That is what it means by finished goods will remain in stock for 45 days on average. Because it's a finished goods, the only thing that is remaining for you to do to it is for you to sell it. So why is it in store? Because there's no customer yet, or you have not yet supplied. So on average, your finished goods will remain in store awaiting some customers for an average of what? 45 days. Then the last part is number 5, which is creditors. Suppliers of raw materials will give credit of 27 days. Suppliers of raw materials will give credit of 27 days. So it simply means that if you buy from your suppliers, you will not pay them, okay, until the 27th day. That's what it means. So if you buy from me raw materials, Keep your money, just collect the raw material and go. Then in the next 27 days, come and pay me. That's what it means by suppliers of raw material will give credit up to 27 days. Then they now went further to say, furthermore, 60% of overhead, which is this overhead here, will be supplied on credit of 15 days. I don't know what makes up their overhead, but that money that they are paying for overhead, it will take them 15 days before they are able to pay back. It means we are not spending the money yet, but we are getting the service, or we are getting the goods, we are getting whatever we are getting. Then in 15 days time, come and pay us. Okay, we that gave you the service, or we that gave you the goods, come and pay us for that overhead. Now, these are the additional information available. Now, when I start solving, I need you to be very, very attentive. Most of these things in your textbooks were not well explained. So I will tell you the reasons why some things are done the way they are done. Just pay attention. Whether you are in transit, whether you are at home, just pay close attention. I will not come back to explain anything to anybody. So let's take this first question, Agile. So illustration 1. So number 1. Okay, Agile. All right, thank you. Now, what did it say to calculate? It said, calculate the amount of working capital required by the company. Calculate the amount of working capital required by the company. The first question you ask yourself is that, is there a format? Is there a formula that we are going to use? Or is there a format we are going to use? My dear brothers and sisters, it's very simple. What is working capital? Working capital is current assets minus current liability. So that is what it means. So what we are going to do here is to say current assets minus current liability. That is the formula. So under current assets, what are the major things that makes up your working capital? I told you in my first class. Under current assets, the major things that makes up your working capital are what? Are inventory, inventory if you were in my last class. And I told you that the inventory will be made up of what? If it is a manufacturing company, you have what? Raw material, work in progress, isn't it? And what?
Finished goods.
Thank you, Jerry, for that response. Now, if it's a trading company, you are only having finished goods. No two way about it.
Finished goods.
Now? Then
Yes,
the next thing that makes up your current asset will now be what? What's the next thing that makes up your current assets?
Trade receivable.
Trade receivables, what we call debtors. You are blessed. Debtors, receivables. Receivables. Then let's say the final one will be what?
Creditors.
No. Under current assets. Do you have any other thing there?
Receive, pay. Okay.
So we have two, Abi.
Yes.
Okay. So under current liability, the way I say you have your what? Your creditors. Okay, that's where you have your what? Your creditors. Cash is also a component of working capital. Okay, cash is also a component of working capital, but these are the major two that will capture in. Now, who are your creditors, or what do you do by creditors? Or let's put it this way: what effect does your inventory and debtors have, or what effect does your current assets have on your working capital? I've said this in my previous class. What effect does your current asset have when calculating working capital? Positive. It means they are always added. Okay, they are added. Then what effect does your creditors have when calculating working capital? Negative. They are subtracted. Are we good now? Are we good? Can I proceed? Is anybody confused? Is anybody confused? Chiamaka, are you confused? Is Barrister on this call? Is she confused? Okay. I haven't understood this. Now let's start our solution proper. Okay. So working capital required by the company. That's this thing. Working capital required. That's what we are asked to prepare by the company. Very simple. Okay. Just put your 2 naira because your answer is going to be in currency. Depends on the currency given to you in the question. So let's start with our current assets. You can start with inventory first. You can start with debtors first. It doesn't matter. Okay. My own is capture both of them because they are in the question. Debtor is in the question. inventory of raw material, work in progress, and finished goods. They are all in the question. So capture all of them. So in this case, let's capture debtor first. Let's just capture debtor first. Doesn't change anything. Debtor. Debtors. Debtor. Now, what did they say about debtor? They said 40% will pay what? Within 30 days. 40% will pay within what? 45 days, and the balance within 60 days. Among all these figures given to us here, which figure represents debtor? Who can tell me? Among the figures given to us here, which figure represents debtor?
6.
Thank you. So 40% of what? 3.6 million we pay within how many days? The first one is what? 30 days. So that's going to be multiplied by 30 divided by what? 360. Is anybody confused? Talk to me now. And who has calculators to help us punch? 40% of 3.6 million, okay, multiplied by 30 divided by 360. You look for the proportion. 30 divided by 360. So what do we have, please? What do you have? 120,000. Please, are we ready for this class?
120,000. 120,000.
120K, Abby. Okay, thank you. All right. Now, can somebody do for the next one for me? The next 40% will be we pay within 45 days. How do I express it? How do I express that statement? Can anybody assist us? The next 40% will pay within 45 days. How do I express it? Anybody? Professional, students, skills. This is ICAN. So that's okay.
Hello, sir.
Yes, go ahead, Baba.
40% of
Yes, sir. That would be 40% of 3,600,000 times 30 over 330.
No, now read it again. Read it again. The next 40%.
Okay, times. Yes, okay. 40% of 36,000, that is 3.6 times 45 over 330.
Over 330. Where do you get 330 from? 360. So you use the days. We pay within 45 days. Use the days 45. Divide it by the total days given to you in the question. If the question is silent, use 365 days. I've told my students this before. Oh, yeah, somebody should help me for the balance. Sir. Yes, I'm with you.
Sorry, I present the clarification on that. I followed the question that the next 40% will be within the next 45 days also. That's why I interpreted the. Yeah, so I was not saying that since it will be in the next 45 days, then it should have taken care of the first 30 days, which you did firstly there. So that's why I said that 30 days. So I don't know if I'm right or wrong, sir.
No, you are wrong. You are wrong. It's going to be treat them individually. You understand? Treat them individually. So the next one is going to be 45 all over the total days in the year. That is 360. So that should be how much? 40% of 3.6 divided by 100 times
180,000.
180. Okay.
180.
All right. Thank you. Oh, yeah, somebody should interpret the last part. And the balance within 60 days. How do I express it?
That's 20% of 3.6 times 60 all over 360.
20% of 3.6 times how much?
60 all over 360.
Very simple, my dear. It's only student that does not pay attention to class that will fail this course. So just pay attention and respond. No steez here. No steez in FM. FM does not send you. Neither does it even send our generation. If it wants to fail us, it will fail us. Oh, yeah, give me figures, please.
120,000.
120. Help me sum everything. They go on.
420,000.
420. Okay.
Yes.
Sprays in this class. Okay. So since we are done with debtor, Abi, now let's move to inventory. Inventory. Now, in this question, we have 3 levels of inventory. Can you see them? Take number 2, number 3, and number 4. So I'm going to solve for them one after the other. So let's start with raw material. I will do raw material. Somebody will do wipe, which is work in progress. That is not possible. Let's just try, Sha. You will do wipe. Another person will do finished goods. Raw material is the easiest. Okay, let me do for raw material first, because you must understand raw material first. So they say raw material will be in stock for 36 days on average. Now, from everything inside this box, which figure relates to raw material?
Direct material, 1.2 million.
1.2 million, Abi. So that means we have 1.2 million, isn't it? Times, how many days will it stay? 36, Abi. So times 36 divided by 360. That is all. Figure me. Like, give me the answer. 1.2 million times 36 divided by 360. What do you have?
120 million.
120 million. Okay.
120. 120,000. Yes, 1,000.
That man like money.
It's 1,000, sorry.
Okay, now let us do for the next guy, work in progress. Can anybody assist us with that? Work in progress, the production cycle will be 72 days. Anybody? I will not say anything. Just do your thing by yourself. Tell me what you can do. Work in progress, the production cycle is 72 days. Item number 3, show me your skills.
That would be
So I want to try.
1.2 times 72 over 360.
1.2 million, Abi?
Yes, times
72
72 over
over what?
360.
Over
360.
360. Any other opinion?
For work in progress, I think we are going to include,
Hello, sir.
since it's not just material. Since it's not just material, I think we are going to include labor and overhead.
Tell me now. You don't think, tell me. Telling me the answer.
Hello,
Somebody
sir.
saying hello, sir. Who is that person? Is this answer wrong?
Well, I don't know, but I have to say my own actually.
Oh, yeah, say your own, say your own. Let's take your own.
Okay. I'm looking at 120,000. The 120,000 we got from
120,000.
raw material. Yes.
Okay.
Times 72 over 360.
Times 72.
The result from the raw material, then it will be a work in progress times 72 over 360. That's my own.
That's your own answer, Abi. Okay, thank you very much for that. I like your thinking. I like your thinking. Is there any objection? Somebody was telling us she think, Abi, she assumed. Help us assume before that. Let's know what we are doing. Okay, Four has finished. Okay, so let's do it. Please pay attention. This is the way work in progress is done. In case you sit in any question, this is the way it is done. Okay, so under work in progress, we need to address raw material. Okay, before we now address the conversion itself, which is the production cycle itself, or the conversion. Okay, the conversion. You must address the raw material. So the same thing that you did for raw material, do it again. Equals to 1.2 million. Only that this time you will use the work in progress days 72. So you say times 72 divided by 360. Okay. Then for the conversion, which is the, raw material first of all come in before you start converting. Then for the conversion, the figure that relates to conversion here, please pay attention. The figure that relates to conversion here is material, labor, and overhead. These are the costs you are going to incur as production cost to convert raw material to finished goods. But because you have treated direct material, which is this material that we have done here now, you don't need to put it again in conversion. So the only thing you are going to put in conversion is now your direct labor and overhead. So add both figures for me. 900 plus 600, they go 1.5, Abi. 1.5 million. Abi? Okay, people are lost. 1.5 million times what? How many days? 72 divided by 360 and make it average by 50%. They don't need to tell you in the question. That's what we do. Any question?
Sir. Hello,
Any
sir.
question?
Yes, sir. Please, please can you shed more light on the 50%, sir? Sorry, sir.
Is standard, average. Conversion cost, if you did process costing, have you heard of equivalent units before?
Yes, sir.
Good. So that's the idea. So for conversion, when you are still converting, okay, we are making use of the average of it. So people will say divided by 2. Divided by 2 is same thing as saying 50%. So when you solve for this, any answer you get, you just take the average of it for the conversion. Just take the half of it. It's a standard. It's not like they must tell you in the question. I don't know if you understand. So we are assuming that the goods that are still working, that we're working on, we're only looking at just like saying average stock, more or less like that, average conversion cost. That's what we're trying to look at.
All right, sir. Thanks, sir.
So help me run this figure.
So, sir,
1.2.
so, sir, whenever we're doing work in progress like this and it comes with conversion, we should always do 50%.
What do you mean by if it comes with conversion? If it is work in progress you are doing, as far as you have captured your raw material, whether you call this one conversion or whether you call it a production cycle, as far as you are talking about this next item that is covering the other cost, pick the average, divide it by 2. Does it make sense? Or look for 50%?
Sir, yes, sir.
So I'm not saying that because I put conversion here, another textbook will also put conversion. They can use another name for it. So don't be saying that, don't think that it's only when you see conversion in the question, then you will say average. No. As far as you are solving for work in progress, all the money you use to spend to convert that goods, remove the raw material, which we have removed. Every other one is called conversion cost. So people can call it production cost. Any name they want to call it, but any name they call it, give me half. That's what I need. Standard, give me half or give me the average of it. So the average is either divided by 2 or say 50%. That's what I need. You get it now? Oh yeah, figure me. Ego ne now. Oh, kabosha.
First one is 240,000. The second one 150,000.
Oh yeah, help me add up everything.
510,000.
How much?
For inventory. 510.
Okay, who can tell me the last thing that we have not captured as far as this question is concerned for working capital?
Payables.
Payables, okay. Oh yeah, now let's treat payables. Who can help us for payables? Any idea? That's your credit also.
Please, sir, I have a question.
Go ahead.
So I thought you said I still don't get this part, the conversion. You said 50% of, is it 240?
Look at what we did here now. 1.5 million times 72 divided by 360. The answer you get 2 times 50 divided by 100. That is half. Or just say divided by 2.
So where did you get the 1.5 million?
See, this woman was not with us. That's the question. This woman was not with us. She went to collect food.
My network was not stable. Sorry.
The 1.5 million is 900 plus 600. I've explained this. 900 plus
Okay.
600. That's your 1.5 million.
Okay, okay. All right, thank you.
Oh, yeah, help us run payables. That's a woman. Number 5. Your network is stable now. Yeah, help us. Number 5, payables. What do we do there? How do we go about it?
That's creditors.
Yes, we know now. Yes, it's creditors. How do we go about it?
That's true. So someone is asking that what about finished goods?
Oh, we've not done finished goods.
Yes.
Who is that? Okay, from chat. Okay, that's fine. Okay, thank you for that. Please, let's do finished goods. So, when you overknow something, you will not be, nobody will not. That's why I say oversabi used to kill. Is that not how people used to say it? So let's calm down and look for finished goods. Okay. The person that is asking, what about finished goods? So yeah, tell us how we'll go about it. The person that is asking, do you have an idea? They said finished goods will be in store for 45 days on average. How do we go about it? Which figure represents finished goods? That's the first question you ask yourself. You must find a figure. Which figure represents finished goods? Who can tell me?
Sales.
Sales, Abi. Thank God you are in this class.
Yes, sir.
Thank God you are in this class. You will not take that answer to the example. Not correct, wrong. Which figure represents finished goods? Sales represented debtors. For finished goods, which figure represents finished goods? All your cost of production represent finished goods. All your costs that you incur to make that finished goods represent finished goods. So somebody should add up our direct material, labor, and overhead. If you like have variable overhead, fixed overhead, all of them makes up your finished goods. Because those are the costs that you incurred to convert or to convert it towards finished goods. So help me add 1, 2, 9, and 6.
2.7.
2.7. So just do it 2.7 million. How many days?
45 days.
Oh, yeah, help me do it like this. Divided by 360. Help me with the answer.
337.5.
337.5. That is 500 now. Oh, yeah, I think we are done now. Just help me add up everything under the inventory. Let's get the total, please. Just say 510.
But sir, they said 45 days on average. What's the meaning of that on average there?
It's the same thing as saying, raw material will be in store for 36 days on average. Can you get the exact day that your raw material will be in store? Everything we are doing here is average. So you cannot get the exact now. So it's on average. So forget about the average. Even if they remove that average and just say we be in store for 45 days, in your brain, add it average because nobody knows. Customer can come today, it can be 20 days, it can be 25 days, but on average, that is what we are looking at. Do you get that now?
Yes, sir.
All right, proceed. Give me the final answer here, please.
847,500.
Sir, ma?
847,500.
Oh, yeah, thank you. Let's come back to our payables. So who is helping us for the payables? First thing I want you to understand that we have two. We have suppliers, payables that relate to suppliers of raw materials, and we have payables that relate to overhead. So somebody should take raw material, another person should take overhead. Sharp. It's simple now.
That is 1.2.
Thank you. So payables that relate to raw material.
Yes.
Will be what? 1.2 million.
1.2, yes, times 27 over 360.
Excellent. Excellent. You have passed this guy. Oh yeah, what about the payables that relate to overhead? Who can help us?
60%.
60% of the overhead will be supplied on credit for 15 days. So we're going to do 60% of the overhead figure
50%.
times
How much is overhead?
600,000.
Okay, times what?
Then times 15 over 360.
360. Life is simple. So that is it, my sisters. Oh yeah, just give me figures. That's all.
The first one is 90,000.
90,000. Okay.
Second one is 15,000.
15,000. Add everything. What do you get?
105,000.
So what do we do to it? What do we do to it? What do you get?
We'll reduce the 105,000.
Okay, you bracket it, Abby.
Yes. And sir, are we not supposed to is labor not part of cost of production?
Is what?
I said the direct labor. Normally, are we not supposed to add it to cost of production when we are doing for payable?
Payable for cost of production. This labor, we use this under inventory now, under work in progress, because it forms part of the money we spend before we are able to convert the raw material to finished goods. So, but under payable, we only have two. Payable for raw material. People are people that you buy from now. So when we bought raw material, we owe them. Okay. Where our overhead, now we don't know what makes up our overhead. It can be labor, it can be anything. But they already give us figure for overhead direct. So which we did 60% of the overhead and multiplied by 15, then divided by 360. But for labor, we have treated labor already. So there's no way we can treat labor under payables again in this case.
So
give me the final answer, please. What you will do to say 420 plus 847,500, then minus 105. What's your answer?
1,162,500.
1,162,500. Who can interpret this answer for me, please?
that's our working capital.
That's your working capital requirement, Abi. That's the
Exactly.
amount we need for working capital. Thank you very much. That is all. Any questions so far? If you want to snap, you can snap. Oh. Any questions so far? Any questions so far? Any questions so far?
Hello, sir.
Yes, go ahead, please.
Sorry to ask this funny question, sir. Sorry. This question, sorry, like how many marks does it carry? Yes.
Which side? I can't hear
you. This question is just of now. Like how many marks?
Like how many marks? You mean for ICAN?
Yes, like in an exam setup.
You can get 10 marks now.
Okay. All right. Thanks.
Oh, so you will know whether you should know it or not, Abi?
No, I'm not trying to look at the stress and also the time that we take, so I can allocate time very well for my question.
You know, if you're writing ICAN exam, you will see the marks there now. So with the marks, you can easily plan yourself. So let's look at the big part. List the various methods of financing working capital. Who knows the answer? The various methods of financing working capital.
Bank overdraft.
List the various methods of financing working capital. Anybody? Do you even understand what the question is even saying? That's the first thing, sir.
Yes. Working. Hello, sir.
Yes, I'm with you.
Sorry. Bank overdraft.
Huh?
Bank overdraft.
Bank overdraft. Excellent. Thank you. Thank you. Next.
Debentures.
Huh?
Debenture.
Debenture.
Yes.
I can't hear the person tell you. Any other one? Somebody said debenture, like loan. That's fine, correct. Any other one?
Commercial paper.
Commercial papers. Thank you. Which one again? The question simply means how can you get money to finance your business? It's more or less like saying sources of funds. Sources of funds. If it's your child now that went to school and you're asking your child question he does not know, you carry cane. You will say you are wasting
Equity.
equity. To finance working capital, you go and collect equity. Yes, correct. Yes. I need more. I need more sources of funds. I need more.
Yes. Then also retained earning can be used for the
Retained
for working
earnings.
capital.
Thank you. Okay, that's fine. Can somebody read this question for us, please? Somebody that can read.
Okay. Osogbo Breweries Limited is considering.
Oshogbo.
Yes,
okay. Oshogbo Breweries Limited is considering a change of its credit policy, which will result in a slowing down in the average collection period from 1 to 2 months. The relaxation in credit standards is expected to produce an increase in sales in each year amounting to 25% of the sales. Sales price per unit 10 naira, variable cost per unit 8 naira 50 kobo. Current sales per annum 2.4 million naira. The required rate of return on investment ROI is 20%. Assume that 25% increase in sales would result in additional stocks of 100,000 naira and additional creditors of 20,000 naira. Advise the company on whether or not to extend the credit period offered to customers. If A, all customers take the longer credit of 2 months. B, existing customers do not change their payment habits and only the new customer. Only the new customer take a full 2 month credit.
Is that a lecturer?
Yes.
Okay. Because you just showed me one skill now. The required rate of return on investment, ROI. Who sent you? Did you see ROI there? You just showed us one skill. And that was why I knew it was you. No problem. All right. Having read this question now, can you solve it? Because that's the most important thing. It's not to speak English. It's not to know how to read. Can you solve it? That's the question that comes to your mind. Oh yeah, now can you guys solve it?
can solve it. We can solve it with your help, like alongside with you.
Osogbo. Osogbo. Praise, can you solve this question? All right. Now, please pay attention. She has read it fabulously well. But however, let me explain the variables contained in this question so you understand what they are trying to say. It's a very simple question. We have solved something like this in our last class. The idea is what we're going to be using here. Now, if you read this question clearly, it says that Osogbo Breweries Limited is considering a change of its credit policy. What do we mean by credit policy? A company that sells on credit has a credit policy. Now, if you go to ShopRite now, or you go to Just Right, will you go and be buying and be saying you want to pay later? The only people that can pay later, I think, are people that have card. They call them special customer. They do like a Just Right card for them. Those people can pay on credit, I think. They usually can move the money from their credit card or one thing like that. But all things being equal, if a normal person like me and you that are not special customers enter there, we're going to pay. So what is their credit policy? All customers what? All walk-in customers must pay for their products. Another credit policy can be for a company, pay 80% and pay the remaining 20% 1 month later. Just like the question we just solved, what was their credit policy? 40% will be paid in what? 30 days. Another 40% will be paid in 45 days, and balance will be paid in 15 days, 60 days. That is a credit policy. So in this particular question, we want to change our credit policy. Now, if we change the credit policy, they say, which will result in a slowing down in the average collection period. What do you mean by average collection period? It means the duration that it takes you to collect your money from your debtors. So if you change the credit policy, it means that the duration you are using to collect money from your debtors will go up. So that's why they say it will change the average collection period from 1 to 2 months. So initially, or let us say now, they are doing 1 month. You will pay, if I said to you, you pay me within 1 month. But now we are changing the policy to what? To 2 months. 2 months, that's the new policy. Now, they said the relaxation in the credit standard is expected to produce an increase in sales in each year amounting to 25% of the sales. It simply means that the moment we say, okay, don't be paying us within 1 month, pay us within 2 months, what is going to happen to sales? They say sales will jack up, okay, to increase. By how many percent? By 25%, which is normal in a real life situation. He said it is normal. Also, free Nigerian person said, if you reduce price, for example, what will happen to your sales? It will go up. Black Friday, White Friday, all those periods, companies experience a lot of sales. Bonanza period, come and buy bone straight. Instead of paying 150,000, come and pay 95,000. You will still lay the screen up for it. Okay, you can buy bone straight and pay me in 2 months' time. They will queue up for it. Am I making sense now? So that is what the question is telling us, that it's going to lead to increase in sales for each year, amounting to how many percent? 25%. That makes sense. They give us the selling price per unit, 10 naira, the variable cost per unit, 8.5 naira, and the current sales per annum, 2.4 million. So it is this 2.4 million that will jack up by what? How many percent? 25%. That's our current sales per annum, which is our like revenue. Are we together now? All right. Now, they said the required rate of return on investment is 20%. On a serious note, I really do not need this to solve this question because I have 2 ways of solving this question. I really do not need this. But because ICAN or this question examiner has included 20%, I already know the pattern he wants me to come from. So I'm going to give him his pattern. No wahala. Even if that 20% is not there, I can still solve and get my answer. No shaking. But since he has given us, there's no challenge. We'll use his pattern. Then he now said, assume that the 25% increase in sales would result in additional stock. Apart from this 25% increase in sales, we also result in additional stock of 100,000 naira. It simply means that we need to get more stock. Because definitely, commonsensically now, if your sales is increasing, you must stock up now. More stock will need to be needed. More stock will need to be increased. So they're already telling you that, look, assume that this 25% increase in sales will result in additional inventory being purchased of how much? 100,000 naira. And additional creditors of 20,000. You still need to go and collect this from your creditors and you are still owing them, okay? So creditors will increase by 20,000. They are already giving you what is going to change by virtue of the change in policy. That's what they are trying to tell you. They now told you to say, advise the company on whether or not to extend the credit policy, the credit period offered to the customer. They say, advise the company, should we extend it from 1 month to 2 months? On two assumptions. Number one, all customers take the longer credit period. If we extend it from 1 month to 2 months, all customers, whether new or existing customers, we want to what? Use the 2 months. Or assumption two, existing customers do not change their payment habits, but only the new customer will change. So existing customer will say, well, the 1 month is not of our thing, we can still pay within 1 month, and they paid. Why the new customer will say, hey, okay, oh, thank God, though, they're going to be using 2 months. So these are the two instances we are going to compute for our solution. Okay, these are the two instances. Now, if you check the requirement of this question, they are not telling you to calculate inventory, what they are not telling you to calculate working capital cycle directly. Neither are they telling you to calculate the amount of working capital required. It therefore means that working capital question can take different dimensions. So if you solve 1 or you solve 2 does not mean that you are a pro. Solve 5. And that 5 must have different requirements so you can understand how things roll. So in this case, now it's a different requirement from what we have seen in today's class. So how do we go about it? How do we go about it? Do we have any contribution from anybody before we proceed? Do we have any contribution from anyone before we proceed? Okay. Okay. All right. So they said, advise the company on whether or not to extend the credit period offered to customers. Now, what we are going to do is to prepare 2 analyses. The first analysis is to check when we are offering it for just 1 month. Then the second analysis is to check when we are offering for 2 months. So we need to check. More or less, I usually tell my students, you want to tell a child the difference between hot and cold water. There's no best way to explain it. Take that child and put it inside cold water. Let him feel it. You say, yes, I like this. Then take that hand and took it inside hot water. Then let him feel it. Only him will explain to himself. So if you are trying to check whether 1 month period or 2 month period, which one is better, calculate based on 1 month period. And then calculate based on 2 month period. And then you will now check, is it better, is it okay, or is it not okay? It's as simple as that. So we're going to calculate using existing policy. I'll say using existing policy. Existing policy. All right, Naira. What do you want to calculate? We want to calculate the changes in working capital. That's what we're trying to calculate, okay? Change is in working capital. Change in working capital. Okay. Yeah. So we'll calculate the change in working capital using the existing policy, and we'll calculate the change in working capital using what? The new policy. That makes sense. So what makes up working capital? We already know, Abi. Debtors. I don't need to start saying that. What again? Inventory, Abi. These are the 3 things. Then what again? Creditors or payables, Abi. So let's identify our debtors and inventory and creditors. Only the change, that's what we need. Let me put 2 Naira here. So let's start with debtors, or you can start with stock or inventory, anyone. Let's start with debtors. What is the change in debtors? Change in debtors simply means old debtor minus what? New debtor, isn't it? Old debtor minus new debtor will give us the change in debtor. So what's our new debtor? What's our new debtor? And what's our old debtor? It's just the change that we need. I've solved a similar question with our students last class, and I used the longer method, which was also very simplified. So yeah, let's look at for the new debtor and the old debtor. How do we know the new debtor? I think that our debtor is calculated on what? Our debtor figure is always calculated on what? Who can tell me? Hey God, am I the only one here?
Receivables.
It's not me and you. Your debtor figure is always calculated on what? To calculate debtors, which figure do you usually use to calculate debtors?
Sales.
Sales now.
Sale.
Sales. You don't need to forget this thing. Sales. So for our old debtor, what is our sale?
2.4 million.
Thank you. Current sale is 2.4 million. Multiply it by, they usually give 1 month, Abi. So 1 divided by what? 12. In the previous example that we did, it was in days. That is why we say divided by 360. This one is in months. They don't need to tell you assume 12 months. Which one is assume 12 months? Oh, that is 12 months anytime, any day. So 2.4 million times 1 divided by 12. Hey, go on. Give me the answer.
$200,000.
Ma?
200,000.
200,000. Now, how do we calculate our new debtor? Our new debtor simply means debtor after the change, okay, in the policy. So how do we calculate our new debtor? Does anybody have an idea?
I think it's 2.4 million times 2 over 12.
Okay, 2.4 million. Let's do it here. 2.4 million times 2 over 12. Now, you see this 2 over 12. Perfect. You got it. Half mark, for example. But you see this 2.4. This 2.4 is not correct because this 2.4, you only made a sales of 2.4 when you were giving 1 month credit. But now that you are giving 2 months credit, the question says that what? Sales will increase by how many percent?
25%.
25%.
Are you with me? I can't hear anybody.
Yes.
Okay, you can hear
Yes.
me. Okay.
Yes, sir. Yes, sir.
All right, thank you. Thank you. So help me run 25% of how much? 2.4 million.
Yes.
Hey, go there.
That's 600,000.
Ma?
600,000.
600,000. Okay, thank you.
Yes.
That is the increment, Abi. Add it to your 2.4 million.
That's 3 million. That's 3 million.
3 million, Abi.
Yes.
If you don't want to do it this way, since you are increasing sales by 25%, just say 125, you understand? Of 2.4 million. Do it, you will still get 3 million. You do it, do you get it? Did you get it?
Yes, sir. Yes, sir.
Yes, sir.
Then you say times what? 2 divided by 12. That's our new sales. Figure me.
500,000.
500,000. So what is the difference? What is the change?
300,000.
Thank you. So working capital changed by 300,000. Our old debtor is usually 200,000. But now our new debtor is 500,000. It means that people that are owing us now is now 500,000. How are we going to run business? People that are owing us 300,000, how are we going to run business? So the difference is what? 300,000. That's the change in debtor. Am I making sense now? That's the change in debtor. Then let's move to stock and check for the change in stock. Stock is inventory. That's another name for stock. Now, looking at the question, who can guide us how we can address stock? They told us that assume that the 25% increase in sales would result in additional stock of 100,000. So they're already giving you the addition directly. So there's nothing to do like old and new. So it will result in additional stock. So that addition is 100 here. So that one is direct, simple. Makes sense, Abi? Then I said, an additional creditor of 20,000. So additional creditor You simply mean that we don't need to do old and new creditor. Just put your creditor direct. For those of you that have not watched my first video, the first video I did, the first lecture we had changes in stock, changes in creditor, changes in debtors. I broke those things down, how we attempted it. Go and watch it. So creditor is how much? 20K. What do we do to that 20K? What's the effect? What's the effect?
Sorry, President.
So you put it in brackets. Are we good now? So give me the total. 300 plus 100 minus 20. What do you get? So that 380 is net investment in working capital.
Excuse me, sir.
Yes, ma, go ahead.
The new debtor I'm getting 625,000, not 500,000.
600 and what?
25,000.
What did you do now? How did you get it? 25% of 2.4 million will give you 600,000. Add it to your 2.4 million that is your sales before. So your new sales is now 3 million. Check now. Then 3 million times 2 divided by 12. The 2 is the 2 months. Then divided by 12. You should get the answer. Are we there? So as you are working on that, let's proceed. So this 380 is what? Additional investment in working capital. It simply means that we are incurring a further 380,000 to run the business. And I will tell you why we are incurring 380,000 to run the business. It's very simple. Our old debtor is 200,000. Our new debtor is what? 500,000. This 300,000 that has increased by debtor is still in the hands of debtor. How do we finance the business? We can go and borrow money. Somebody told me overdraft. Somebody told me equity. Somebody told me retained earnings. We have to borrow money to start financing our business until this debtor pays us. The next one is stock. This stock that is here now, okay, it says stock is going to be increased by 100,000. We'll go and get the stock now. Isn't it? We need money to go and what? To go and get the stock. And then creditors will increase by 20,000. If creditor increase by 20,000, does that not mean that we are owing them? So it therefore means that the company needs a working capital of 380,000 to sustain itself. That's what I mean by the net investment in working capital. They can decide to go and get it from the bank, from overdraft. They can decide to do whatever they want to do to get the money. Anything they want to do, please take note. The required rate of return on investment was 20%. So what it means, this particular statement that is here, what it means is that if the shareholders, if anybody gives you money, let us assume the shareholders specifically, if the shareholders decide to give you 380,000 to run the business, what they are expecting from this 380,000 is 20%. That's why I say the required rate of return on investment. Because this is investment in working capital, meaning that the amount you're going to spend on working capital. So this 20% is what the shareholders or the investors are expecting if they give you this 380,000. So what you're going to say, you're going to say 380,000 times 100. Investment in working capital, I mean, return on investment. What's the formula for ROI? Return on investment. Net profit, Abi. Net profit divided by what? Investment, Abi.
Average investment.
Yes, times 100 over 1. So our investment is the 380, the money we want to give. The 100 is 100%. Then what is our profit? That's the first question. What's our profit? What's our incremental profit that we are making? The idea is that if your sales, if your 2.4 million increase by 25%, it therefore means that on an average, profit will also increase by 25%. Do you agree with me? Do you agree with me? It's common sense. If your sales increase by 25%, it therefore means that your contribution or your income or your, let us say profit again, will also increase by 25%. Is it commonsensical? Do you understand that? Talk to me now. You are the reason why I am here. Is it clear to you?
Yes, sir.
Yes,
Now, talk to me. So for us to get our net profit or gross profit or any profit here, what we are going to do is to say, okay, if sales increases by 25%. What is the increment? We have done it before, Abi. 25% of the 2.4 million. We got what? 600,000. It therefore means that inside the 600,000, the profit inside is also 25%. It's also how many percent? Sorry. Hold on. I think I saw something somewhere. Hold on. Okay. I saw something. Assume the 5% increase in sales. Okay. Okay. Yes. So if this is your 600,000, it therefore means that your contribution, or what you call your profits, in this case, you can say contribution because you only have variable cost here, sales minus variable cost. Will now be how many percent? Please, can somebody do this for me? 10 minus 8.5.
1.5.
1.5. 1.5 divided by 10 times 100. Egone?
15.
Huh?
15.
15%. So our contribution will be 15%. Well, them are confused now. Of what? 600,000. So do 15% of 600,000. What do you have? 600,000.
That's 90,000.
That's 90,000. Okay, so I know the only thing that will confuse you now is why are you doing all this to get 15%? Why don't you use 25% directly? Okay. So if you take the question, they gave us sales and they gave us variable cost. Sales minus variable cost is equals to contribution. So now our sales increased by 600 by 25%, which gave us 600,000. Now we want to
Hello, sir.
now let me finish
Hello.
first. Wait, let me finish. I'm explaining something. Our sales minus variable cost is what? Gives us contribution, isn't it? And the question says that your sales increased by 25%, which is what? 600,000. If your sales increase by 25%, how will your profit or your contribution increase? The best way to express your contribution or to determine the increment of your contribution is to calculate what we call contribution to sales ratio. Contribution to sales ratio simply means contribution divided by sales. This formula is used to determine what? The value of contribution in sales, or the incremental value of contribution inside of sales. So what's our contribution? We say 10 minus 8.5, which gave us 1.5. That's our contribution, 1.5. Then you divide it by sales. What is sales? 10. And you multiply it by what? 100. That's how we got our 15%. You will do more of contribution to sales ratio when you are doing break-even point, or CVP. Anyhow you want to call it, CVPA. CVPA. Cost volume profit analysis. If you have attended my class before on PEP or CVPA, you should know what contribution to sales ratio is. If you have not attended my class, invoke your lecturer that taught you in school. Costing is there. It's a popular topic in costing. ND1 and the ND2, they know it. So that is how we work with it. And that's how we got this 90,000. So this 90,000 we are going to put here as our profit, or in this case, contribution, because we are only giving sales minus variable cost. So let me pause here and take any question before we continue. You can ask your question.
Yes, sir. I'm fine, sir. Thank you, sir. I'm fine.
Okay. So is this clear? Praise. Is this clear?
Sorry, not clear.
What is not clear?
Okay, I understand this in 380,000 naira, which I still disagree with the 500,000 given. But then I'll do my calculation. But this other one you calculated here, how you got the
Which one? Which one?
ROI? ROI.
How do we get
return on
it?
investment. Yeah.
This is ROI now. Is it this one? Is this ROI you're talking about? This one?
Yes, sir. Yes.
Okay. So look at it, said the required rate of return on investment is 20%. That's the name now. Even when the lecturer was reading it, she called the name ROI, return on investment. The formula for return on investment says what? Net profit divided by what? Investment times 100. Okay? So this 20% is what the shareholders are expecting. They give us 380,000. Now let us compute our own ROI that we are getting from this investment directly. And then we'll compare it with our 20% and see whether we got what? A higher or a lower one. I don't know if I'm making sense. So the 380 is 380 for what we have computed here. The net profit in the formula of the ROI is what we need to compute. Okay, the net profit is what we need to compute. And for us to compute the net profit, I gave you a logic. I said that the question states clearly that sales increased by 25%. Now, if sales increased by 25%, it therefore means that contribution or profit is also therefore going to increase. All things being equal, we are going to say that, okay, profit can increase proportionately by 25%. But we cannot just assume that it will increase by 25%. What we needed to do was to use a technology. What is that technology? CBPA technology or BEP technology. What is CBPA saying here? Under CBPA, there's a formula they call it contribution to sales ratio. Contribution interpreted as profit. Then it tells us how much contribution is inside of sales. So if you say that sales increased by 600,000, then how much contribution, aka how much profit is inside the 600,000? That is what that formula is stating. We use it in practice on a study when we are in the manufacturing sector. So how much profit is inside that sales? That is why we use the contribution to sales ratio. How do we get contribution? The question gave us sales, the question gave us variable cost, minus it. So sales is 10 naira, variable cost is 8.5. If you minus it, you have 1.5. 1.5 divided by what? By sales again, because the formula is contribution divided by sales. So what is sales? 10 naira divided by 10 naira multiplied by 100%. We got 15%. It therefore means that inside this 600,000, 15% is the contribution or the profit element, all things being equal, not 25%. I don't know if I'm making sense now. So if the sales is 25% and your contribution is therefore 15%, it therefore means that your variable cost is how many percent? How many percent? 10%. Who agree with me here with what I just did? Who agree with me here?
I agree with you, sir.
I agree with you, sir.
With me, Abi?
Yes, sir.
So 15% of the 600,000 is 90,000. So that is our profit that we want to use. I told you that the name is contribution because we have a variable cost, but I'm using the word profit because not all students can understand the word contribution. It's like rocket science. Okay, so let me use the word profit everybody knows. So 90,000 is here, divided by your 380 times 100. What did you get? What did anybody get? Hey, wahala.
So, sir,
23.68.
23.68.
68.
Okay.
Yeah.
Percent. 23.8%. Compare it with the 20% that shareholders are expecting. What does it? Who can interpret this? You got 23.8% from this investment. Okay. If you invest 380, the profit you are going to get is 90. It therefore means that the return on investment is 23.8%. And shareholders have told you beforehand that, oh, if I give you this 380, what we are expecting, this 23.8 is what actually happened, or what will happen if we invest. This 20% simply means what shareholders are expecting if they give you the money. So interpret it for me. What is going to happen here? Anybody?
the what we got, the ROI we got is higher than the required rate of return. So they will go for the investment.
Thank you. What the investment is going to give to us, which is the one that we have solved, is 23 point. Somebody says 23.68. Who is that this person? Okay. So that means there's 6/8 here now. Okay, let's put that.
Yes, I was saying something. I was like, for what is it called again? For net profit, can we assume net profit to be contribution, because that's what you did here. In
Listen to
cases
me.
where we cannot like get
Yes.
the exact net profit, probably because they did not give us fixed cost.
Yes, you have said it already. A business that does not have fixed cost, the contribution is equal to profits. You have said it already. But when there is fixed cost, you will not say contribution minus what? Fixed cost, you not get what? Net profit. In this case, this business does not have a fixed cost. So it is wise for us to use contribution. Does that one enter? Did that one enter?
For the lady that was complaining, the upper solution, the reason why you are getting that figure is because he put 125% times 3 point, I think times 3 million. It's supposed to be 125% times 2.4 million. So
Okay, maybe she
correct
will
it.
she will hear you now, so she can correct herself. No problem. Thank you for that. Thank you for that. So we should go ahead with what? With the investment that being working capital, because it will provide us a higher ROI than the 20% expected. If it was lower, if the 23.68 was like 19 or was 18, we will not go ahead though, because it is not giving us a return compared to what the shareholders are expecting. That one makes sense, Abi. All right.
Why no take torchlight, Joe?
But sir, I have a quick question, sir.
Go ahead, please.
They said sales will increase by 25%. They did not say profit or contribution. I believe sales has cost of sales in it now.
You said what? They said what? Sales will increase by 25%.
Yes, sir.
Who can answer that question that this man just asked now? He said they say sales will increase by 25%. They did not say profit or contribution. Who can answer this question? Please, let's be fast. No time. I need to solve another thing.
Okay. So when they say sales increases by 25%, when a sales increases, the profit also increases. When a sale decreases, the profit also decreases. So now the sales was increased by 25%, which means that the current sales was 2.4 million. So now adding the 25% increment, that's, I think when you do 25% of 2.4, that's 600K. Then you add 600K to 2.4, that's making 3 million naira. So that's the current sales, like current sales. So that's you added the previous sales plus the increments. So now, being the fact that your sales was since the sales was increased, definitely your profit will be affected. So there'll also be increments in your profits.
Thank you. Which person will increase sales without increasing profit? You used to sell 10, maybe you are a dealer in AC. You used to sell 10 AC every month. The day you ran Black Friday, you sold AC. What? You sold over 30 AC. Will your profit be the same thing as when you were selling 10 AC? So indirectly, there is a link, there's a connection between increment in sales and profit. So that is why we have to do it that way. It is logic. That's why you are doing ICAN. If you do not attend classes, you will not understand. It's good, Abby. You're on the same page.
Thank you.
All right. All right. So we have done it using existing policy. So now let's do using what? New policy. So change in working capital using new policy. So yeah, we started from what? From debtors, Abi. So just let's go. So debtors, let's put our naira. So what happened to debtors? So if we initiate the new policy, wait, who can tell me what is the new policy? Who can tell me the new policy? Who can tell me what the new policy is?
Collection period is to be increased from 1 month to 2 months.
God will bless you for that. So
Alright.
good. So that's what our answer will not be what? It will increase from what? 1 month to 2 months. That is 2 divided by 12. And since it's the new policy to be affecting what? The increment is 600,000. We've got to be 600,000 here. This is it. This is it. 25% of 2.4 million. That's the new sales, the incremental sales. So it is this incremental sales now. We will now multiply by 2 divided by 12. Okay, 2 divided by 12. So anybody work this for me? That's the bill that the existing customer do not change their payment habits.
100.
We are solving for the bill that the existing customer do not change their payment habit, and only the new customer. So the new customer is the 600,000. So it is only the new customer that will come, that will go for the what? 2 months. Existing customer will not go for the 2 months. What is 100,000? Thank you. So move to the next one. Stock, Abby. Stock. They said stock will increase by how much? 100,000. We are told in the question. Do you remember? Look at it here. Then the next one is what? Creditors. What do they say about creditors? 20,000. Look at it here. Minus it. What do we have? 220, 180,000. So this will be our investment in working capital. Our investment in working capital. So on the assumption of B, okay, the B parts. So, okay. So now let's calculate our ROI. The reason why we're calculating ROI is because the question gave us ROI. I can solve this question without ROI. Because the question gave us ROI, so we need to follow that ROI pattern. So what is ROI? Your net profit, Abi, over what? Investments. Times 100. So what's our net profit is 90,000. We've done it before. Divided by what's our investment in this case now? 180. They multiplied by 100 over 1. What's our final answer?
50.
50. So who can go ahead to interpret this? Compare it with 20%. What do we do? What do we do? Should we go ahead with the investment or not go ahead with the investment?
We should go ahead, sir.
Investment.
Yes, we should go ahead. 50% is higher. So any question before we proceed? Let me see if I have another question here. Okay, any question before we proceed? Any question before we proceed? Or any contribution before we Okay, so that is clear, I mean. Can somebody help us to read Benway Limited? Let's look at that question. Or the ones that we have solved, are they okay? Can somebody read for us, please? Okay. Number 3. Benway Limited achieves a current sales level of 1.8 million per annum. The cost of sales is 80% of this amount. So if you do 80% of 1.8, you get cost of sales. But bad debt average 1% of total sales. So you do 1% of 1.8, you get bad debt. of total sales value. And the annual profit is, so this is our sales, they've done it for us. Why should do 80% of this?
1.4.
1.4, good. Why should do, this bad debt is 1%, do 1% of your sales. You get this? You get 18,000. Makes sense, Abby? All right. So they said the current debt collection is 1 month. This is what is currently happening. Okay. This is this bad debt average 1%. This bad debt, this current debtors. The current debt collection is that debtors pay in 1 month. And the management of Benue Limited considers that by easing credit terms, sales would be increased as follows. So they gave us the current policy and they gave us what they intend to do, proposed policy. So current policy, sales did not increase, so there's no additional sales. But in the proposed policy or the new policy that is going to be introduced, they say they're going to increase sales by 25%. So we're going to increase sales by 25%. The other one says average collection period. The current collection period from debtor is 1% as indicated, and 1 month as indicated here, which is 1 month. But with the proposed policy, they were changing to 2 months. The bad debt of 1% is percentage of sales is 1%. With the proposed option, bad debt will increase towards 3%. Then they went further to say that the company requires 20% return on investment, the same pattern. 20% return on investment. If the cost of sales are 75% variable and 25% fixed, okay? So if the cost of sales, what's the cost of sales here? So this cost of sales, we're going to break it into 2. You know, this cost of sales is now 100%. On its own, it is now 100%. It was when you were removing it from sales, that was when it was 80%. But now that it is standing on its own, it is now 100%. So 75% of it will be what? Variable, Abi. Then the remaining 25% will be what? Will be fixed. So that is why if you add both, you get 100%. Are we good now? Are we good now? All right. So if the cost of sales are 25% variable and 25% fixed, and on the assumption that, hey, there will be no increase in fixed costs from the extra turnover. Okay, there will be no increase in fixed costs from the extra turnover. So normally, if sales goes up, cost of sales should go up. Okay, and the cost of sales is going up. They are saying that the fixed part will not increase. It's only the variable part that will increase. That makes sense. That is the first assumption. Assumption B, there will be no increase in average stocks or creditors. What is the preferable policy? Is it the proposed option, which is this, or the present policy, which is this? So which one is better? That is what the question is asking you for. The proposed policy is already giving us a profit of 342,000. Okay, the proposed policy is already giving us a profit of 342,000. So let us, the present policy is already giving us a policy of 342,000. So all we need to do is to calculate for the proposed policy and check the impact of the proposed policy on our annual profit statement. It's as simple as that. Okay, so we're looking at the proposed option or the proposed policy. Now, with the proposed policy, we're going to redraft this P&L, okay, because of the requirements. Look at the requirements now. What is preferable? Is it the proposed or is it the present? So we have already solved for present in the question. Let's just solve for proposed. So what will happen to sales? How much was sales before? 1.8 million. What will happen to sales? Additional sales will be how many percent? 25%. So run it for me. So we have additional sales of 25% of 1.8 million. Egone?
450,000.
Ma?
450,000.
All right, so the next one is going to be cost of sales. Okay, so I'll call it variable cost of sales. Because we are told in the question that nothing happens to fixed cost. Okay, on the assumption that there will be no increase in fixed cost from the extra turnover. So our variable cost of sales. Whew. So how do we get our variable cost of sales? Please stay with me here. Stay with me here. All right. Our variable cost of sales okay. Our variable cost of sales shall be where is it? Okay, shall be cost of sales divided by sales, times the variable part is how much? 75% times 75%. So what is cost of sales? Cost of sales is how much? 1440. What are simply this to express cost of sales as a percentage of sales? 440. Then divided by sales, which is 1.8 million, times 75%. Or if this is not clear to you, what you are doing is to say 75% of your cost of sales, which is 1440, because this 1440 has variable and fixed inside. So take out the variable component. Any answer you get, can somebody run the first one for us first? Can somebody help us with the first one?
140 give me 0.6.
0.6. In percentage, we have many 60%. Can somebody do 75% of this 1440? What did you get? What did you get? 75% of 1440. What did you get? What is happening now?
That's 108. No, sir. 75% of 1440
is how much?
1,080,000.
Oh yeah, divide it by your sales.
Okay, sir. That's
You must get
0.6.
60%. Good, 60%.
Yes.
Yeah, that's what we did. Okay. So that's how to calculate your answer. All right, that's how you go about your answer. So what do we have there? That will now be our variable cost of sales will now be 60%, no longer 75%, because 75% was due to what? When we are incurring 1440 and when we are making sales of 1.8. But now that sales is changing, variable cost will change. So this 75% has now reduced to 60%, which is our variable cost of sales. So that will now be 60% of how much? Of our sales, 450,000. Because if you check your question, it told you that the cost of sales is 80% of this amount. Of which amount of your sales value? So the percentage must be multiplied with your sales to get your cost of sales. So can somebody do 60% of 450,000? To what? 270.
270.
270. Oh yeah, take it out. What do we have? It should be like
180,000.
180,000. All right, so that 180,000 will now less our bad debts. I mean, our additional bad debts. So our additional bad debts, because everything we are doing is additional. Even our sales was additional, just the 25%. Our variable cost is the additional, okay, which is 270,000. So our additional bad debt also. Who can tell me what happened to bad debts? What happened to bad debts? Check the question now. Look at it. What happened to bad debts?
Bad debt increased.
It increased. So what was the previous bad debt?
By 3%.
It was 1%, now it's 3%.
Okay, it was 1%, now it's 3%. So how do we calculate the increment? So let's do like this. Let's say let's say old bad debts, we can get the increment. And let's say new bad debts. You get it, Abi? So that old bad debt was how much? 1%, Abi? Of how much? Of how much?
18,000.
God bless you. No, 1.8 million.
1.8, sorry.
1% of total sales value. Look at it. But bad debt average 1% of total sales value. Multiplied by 1.8 million. What's our old bad debt? $18,000, Abi?
Yes.
Then what's our new bad debt? 3%.
3%.
Now, of how much? Of how much? Use the previous logic. Of how much?
1.8 million.
4.8 million. Eh? Where do you see 4.8 million?
1.8. 1.8.
No, you can't use 1.8 now. Sales has changed. It's a new bad debt. If the old bad debt was calculated on old sales, then the new bad debt should be calculated on the new sales. What is the new sales?
450.
450,000.
The new sales is 450,000
450,000.
plus 1.8 million. This 450 is just the increment, 25%. If you have done 125% of 1.8, check what you are going to get. It will be the same thing as 450 plus 1.8. That's the total new sales. I know your bad debt will calculate on your total new sales. Calculate for me. What do you get?
2,250,000.
It's 2.25 million. So that will give us 3% to give us how much?
67,500.
So we only pick the change. It's only the change we need because all these items are the change. So if the new debt is 67.5 and the old debt was 18,000, what is the change? Just minus. Look at this guy. Doesn't matter whether it's up. Somebody will stay at
49,500.
49,500. So it should be in negative because a bad debt is going out. Okay? Going out. Any question on that before we proceed?
Please, can you explain this part again?
This is bad debt, Abi. So we want to calculate the difference, that is to say the changes in bad debt. So we recognize what was the old bad debt and what is the new bad debt. From the question, or all things being equal, bad debt is calculated on debtors. And in this case, our sales is the same thing as debtors. It's the same thing, I've told you before. So we did 1% of 1.8 million, which was our old bad debt, Abi, which is 18,000. Now our new bad debt is now 3%. But we cannot say 3% of 1.8 million because 1.8 million is the old sales that we usually make. Now we're going to calculate it on the new sale. If your old sale is 1.8 million, and they say it is going to increase by, let's say, plus 25%. It therefore means that your new sale, aka your new debtor, will now be what? 125% of your what? 1.8 million. And I think that's how she got the 2.25 million. I don't know if this one is clear. So this is now your total new sale. This 450 that is here, that is the increment, add it to 1.8, that is the previous sale. You will still get the same 2,250,000. So that's what we calculate our 3% on, for us to get 67,500. So if this is our new debt and this is our old debt, it therefore means that debt has increased, which is 49,500. That is why we are putting it in brackets. But if the debt reduced, okay, if the debt reduced is a plus to us, we don't need to put it in brackets. It's like an income to us, just like saying reduction in provision for bad debt in financial reporting. You understand? So that is it.
Yes. I was also looking at this percentage increase. If we had used 1.25, that's 125%
Okay.
multiplied by that 1.8, and we have 2.250.
Yes.
Then we also do variable costs on the 2.250. Will it still be okay that you are looking at the increase? Later, you just deduct it from here and see the difference.
Is it for the purpose of calculating the bad debt?
No, for this, the workings you have, if you follow that approach.
But you see, that approach that you are following now, it's not be a long route.
Okay.
It just be like a long route. So why don't you just do 25% of the 1.8 to just get the increment?
Okay.
So it makes
But it will still give you the same thing after.
Probably if I get what you are saying, it should give you same if you work it well. Because you are going to do sales, old sales and new sales. You will not subtract. So what you're going to do is to say old sales, which is how much? 1.8 million. You will now say new sale, okay, which will now be how many? 125% of how much?
1.8 million.
Yeah. So you will now get 2 million, Abi.
225.
You will now subtract now is to get the increment. The increment will still give you 450.
450.
You understand?
Yes. Thank you.
So anyhow you want to do it, you still get similar answer. Okay. Are we good? So let's clean that. So I want to ask a question. Are we true with what we have? Are we true with what we have? Are we true? Based on our P&L, yeah, we are true. Okay? But based on the information that we have, we are not true. We need to calculate for cost of finance. Okay? So usually we less it. So less cost of finance. Don't worry, I will explain. Or finance cost, anyone, I will explain. If you are in my first class, this should not be a challenge for you. So let's adjust our cost of finance. For us to calculate our cost of finance, we must calculate our requirements, our change in working capital. Our change in working capital. I need you to pay attention here. I need you to pay good attention here. I know you know it. Change working capital is what we have been doing since, which is all this one. Change the working capital using new policy. Change the working capital using old policy. The same thing we want to do. It's the same thing. No wahala. Now, change the working capital. That's what we want to calculate now. And you already know, we'll look for debtors. We'll look for stock. And we'll look for payables. These are the three things we're going to look for to calculate change in working capital. But should I say, fortunately and unfortunately, all the information given to us here, it's only debtors that is here. Abina, it's only debtor that is here. Or did anybody say anything related to stock? Maybe I'm the one that is not saying. It's only debtor, which is sales. Did anybody say anything related to stock or payables? Please help me. Okay, so me is only debtor I'm seeing. So I will say new debtor and old debtor. So just to get the change, new debtor and then old debtor. So once we get the change, that's what we'll just use our change in working capital. I think we had stock and the other ones would have done it. All right, so what's our old debtor? Our old debtor, okay, you know, debtors are allowed, which is bad debt. Debtors are allowed 1 month, Abby. Let's look at the current debt collection is 1 month, not 1%, so it's 1 month. So our current debtor is 1 month all over 12, of which amount 1.8 million. That's our old debtor, Abby. Then our new debtor will not be how much? 2 divided by 12, but it's not 2 months, multiplied by what's our sales figure now? Somebody gave it before 2,225. 2,025. That's all, my brothers, my sisters. So somebody should give me the answer for the new, somebody should give me the answer for the old. So it's the change that we're going to look for. Change in debtors. Please help me now, please. It should be 150,000.
For the new one, 375,000.
375. So it's the change. Help me with the change. 45? 225.
525,000.
Minus now. You are looking for
No,
change.
225.
That's the change. And that's the only thing. Yeah, so that is the same as what investment in working capital. Okay, so we're going to spend additional, we have an additional what? 225,000. What we did here is the same thing as what we have been doing here before. Look at it, change the working capital. We work for debtors, work for stock, work for creditors. You understand? Look at it here, new debtor, old debtor. We got the change. But because there's no stock and creditor in the question, so that's why we are not proceeding. And that's why the answer that was our net investment in working capital. Okay, so look at it here. Okay, so our net investment in working capital. So therefore means that our working capital has increased by 2.5%. Abi? So what is our interest we are going to pay for this 2.5%? Check the question. I think they told us 20% ROI. So please do 20%. I will tell you why we are calculating 20% of 225. How much is it? That's
45,000.
Good. So because our working capital increased, our equity holders will give us the money. Or whoever wants to give us the money should give us the money. But we are going to pay finance cost on it. That's why we call it less cost of finance. So 20% is what they are requiring from any money that they are giving to us. So this is the money that we need, 225,000. That is our investment in working capital, 225,000. So multiply by your 20% to get the interest you are going to pay for borrowing this money. So this 45,000 is what we are going to take to our P&L account here and say less cost of finance, 45,000. And we bracket it. Do you understand it now? And that is all. That is all. This is one of the most simplest topic as far as FM is concerned. So please do it for me. 180 minus 49.5 minus 45. You get your what? An answer, either a profit or a loss. Additional profit or additional loss.
$85,500.
85?
85,500.
Is that here 55 or 85? Which one are you saying?
85.
So it's positive, Abby? Definitely. So there should be additional profits. So this is the additional profit you are making, okay, from the proposed policy. So in addition to your 342 that you are using, so you are making a new profit, an additional profit of what? 85 what? 500 by introducing the new policy. That makes it worthwhile. Okay, that makes it worthwhile. And I think you should go ahead with it. As profit to be increased by 85,500. Any question?
Sir, in the other question, when we did this ROI, right?
Yes.
We had to solve for the net profit to check if the investment is worthwhile.
Yes.
But this one, why are we using it to solve for finance cost?
Okay, thank you very much. When you are solving a question, look at the requirements of the question. Okay? Look at the requirements of the question. The requirement of this question, we are comparing whether we should change policy, isn't it? So this is it. Now, pay attention. Pay attention. You are not a static accountant. When a question changes, you are meant to find a way to solve the question. When a question changes, you find a way to solve the question. Now, in this question that we solved here, okay, when we got our investment in working capital, which is 180,000, we have to say net profit divided by the investment times 100/1, just to show if this particular new policy is viable or not. Is that what we did? Is that not what we did?
Yes, sir, that's what we did.
So when we did it, we realized that this new policy will give us 50%. We compared it with what? 20% that was given to us as the benchmark. Isn't it? Now, in this particular question, we are not comparing anything with the 20%. What we are comparing is option 1 and option 2 directly. And they give us a P&L account. And this P&L account was prepared in accordance with the present policy, which is option 1. We want to determine what the proposed policy would be. The proposed policy will simply be an amendment of the ones of the P&L account to suit the new policy. And that was why we had to prepare the new policy by preparing a new P&L account. Now, when we got to this level, which is 49,500, I asked, is there anything that is left for us to do? You said nobody answered. And I said, there's one more thing called cost of finance or finance cost. And I told you, finance cost, before you can calculate your finance cost, come to calculate your change in working capital. This change in working capital will enable you to know whether you are spending more money or you are reducing what? Your money. So in this case, we realize that we are spending more money because our debtor is 150. Now our debtor is 375. It therefore means that more of our money is with our debtors. We need extra 225 to run our business, which we need to go and get. And if we are getting 225, what is going to happen? What is going to happen is that we are going to pay a finance cost of 20%. Now, maybe you are expecting me to say, okay, ROI will now be equals to net profits divided by investment times what? 100. I am not getting ROI again. If I'm calculating ROI, I'm getting a percentage. If I get that percentage, what do I want to use the percentage to do inside this P&L account? I don't need a percentage in P&L account. I don't need a percentage in P&L account. What I need is absolute figures, raw figures, not percentage. So what I did to say, okay, from this 225, I'm going to pay an interest expense of 20%. So I said interest expense of 20% of 225 will give me 45,000. That is the cost I'm going to pay. And I'm going to put the 45,000 here. And that's how I got 85,500. Also remember that when I was solving this question on Shobo, I told you that there are two methods to go about it. Okay? I can either use this 20%, this ROI method, or I use this particular method here that I used here. This particular method that I used here. The reason why I use the ROI method here, without going further to begin to do finance costs in this particular one, was because of the nature of the question. So I can either use ROI pattern or I use that finance cost pattern that I used here. But if I use that finance cost pattern, I will not be getting percentage, I'll be getting absolute figure, which also means the same thing. I don't know if I'm making sense. Am I communicating? Am I communicating?
No, but I'm trying to get it.
There's nothing to try to get. So what you just need to do is check the questions, okay? You cannot get everything in one class. Check the questions and try it yourself. The best way you can learn is to learn privately. I will only give you the rules. So the questions are different. They're coming from different dimensions. Okay, so if they're coming from different dimensions, does not mean that I must use the same pattern. The way I solve a question will be different from the way I will solve another question. All you just need to do is to master it. Take another question and solve, master it. Take another question and solve, master it. That's the only thing you will do. Okay. If that is clear.
Sorry, sir. Please, where do you get that 20%?
Which one? Is it not your ROI?
Down.
It's not that 20%, ROI.
Yes, this one.
20%. Look at my mouse. 20% ROI.
Okay.
This one that I solved as Oshogbo. This Oshogbo that I solved. That our final answer is 23.68%. Because of this
So
that is
are you
asking,
saying now that you use the 20% of the ROI times the increment in debtors to get the
20% of 225 that we got here to get 45,000. That was what we did. Do you understand? That's what we did. Now, because of that lady that is asking question, she's asking, why didn't we do the ROI pattern? Like, why did you do ROI? Why did you do this? Now, I want to solve this Oshogbo. I will only do this existing policy. This existing policy that I did, that I use ROI pattern to solve it. The moment I use ROI pattern, check, the answer I got is in percentage. The answer I got was in percentage. Now, I don't want to use ROI pattern. I want to loss you again now by using another pattern to solve it. So let me use another pattern, and that pattern will be similar to what? Recognizing what? This finance course that I did here. Let me show you the pattern now. So maybe that time it will be clearer. So Oshogbo again. Okay? So I will say, what is that question? Number 2. Oshogbo. Yes, number 2, Oshogbo. So I'm using the existing policy. I want to solve that existing policy for you again. Existing policy. Okay. Now, let me take you through what I did here in the existing policy before I solve the new one. In the existing policy, what we did to say, it was to say, we are looking for change in working capital. And I told you, whenever you are looking for change in working capital, pick the 3 elements. Is it? So we talked about new debtor, old debtor, we got the change 300,000. We talked about stock, they already gave us the change directly 100,000. And then we talk about what creditors, they give us the change already 20,000. If I'm to solve this question again, to know whether this particular thing is viable or not, without going to the ROI pattern, which is the percentage pattern, the way I will be able to solve it is this. Come with me. Stay with me. Is it? So I'm going to have my Naira. And I'll say what? Sales. I mean, I'm missing P&L pattern now. I'm missing P&L pattern. So sales. So who can tell me my sales? Based on, where is that question? Stay with me, oh. Stay with me. Our sales is 600,000. Our sales is 600,000, but that's incremental. That's 600,000. Pick your 600,000. So what will be your variable cost? What will be your variable cost? Let's go and check what we did. Or what will be your variable cost? Okay. Okay. Hold on. So variable cost. And the other one will be what? Contribution. So I think we calculated contribution before. What was our contribution? Stay with me. 90,000, Abi. We calculated it before. Look at it. 90,000. Where is it? 90,000. We've done it before. Look at it. Contribution is 15% of this sales, 600,000, which is 90,000. Oh yeah, let's go down and put our contribution there. 90,000. So your variable cost will now be what? 600,000 minus 90,000. What do we have? 510, Abi. 510. So minus it. You got, yes, this is how we're going to do. So that's our contribution. So this is using the P&L pattern. So our sales increment was 600,000. Our contribution is 90,000 as we have completed before. I don't need to do that again. Then 600,000 minus 90,000 will therefore give you your what? Your variable cost. Don't forget this contribution is 15%. So here should be 85%. In case you want to ask, where do you see 15% again? We solve for it. We solve for it. Look at it. We solve for it. 15%. And we did it somewhere here. Did it somewhere here. It was you that gave me the answer here. Contribution divided by sales. So what we got here was 15%. If you do it now, 1.5 divided by 10 times 100, we got 15%. So good. Now let's continue. We have gotten our contribution. Please, are you good with me up to this level? So the last part will now be less finance costs. Finance costs. So before you to get finance costs, you must look for what? Your working capital. So let's go and check our working capital change that we did. This working capital change that we did here, that we got 380,000. Let's pick it. If I'm solving the question afresh, I know what to do. So this 380,000 is our change in working capital. When we did everything, that's our 380,000. So pick it. Pick it. Oh yeah. So our finance cost now be, since it is 380,000, and the investors are expecting how many percent? 20% to run it for me. So that will now be our finance cost. So help me subtract what we have. Help me multiply it. What do we have? That's 76,000. So let's it out. What are we going to have? 97, that's 14,000. So this 40,000 is our final answer, which we call additional profit because it's positive. Additional profits. Additional profits. So now it is additional profit of 14,000. So it is either I do it this way for the examiner and it will mark me correctly, or I use the ratio parts, the ROI parts. This is it. I will not get 14,000 here, but it will only tell me that what our return on investment is what 23.68, which I need to compare with 20%, which is my cost, finance cost, and check whether it can pay for my finance cost. So 23.68 can pay for my finance cost. I'll be having 3.68% left. So there are two ways to go about it. It is just fortunately or unfortunately that this particular question that we just solved, we use the P&L pattern. I don't know if that makes sense now to you, the person that asked that question. That's the person that's making me to do all these things. Does it make sense to you now?
Yes, sir. Yes, sir. It does.
So please, you have to be a flexible accountant. You have to be very flexible. No, if it's FRO, follow FRO. That one is standard. If it's PM, you have to be logical. You think 3 times beyond what the examiner is saying, so you don't fall into their pits. That is how we go. Please, that's how I'll be stopping for tonight's class. So let me entertain any question before we call it a day. Any question? Before we call it a night, Sabi. All right, so please try questions on this, especially FM students. This is in SFM too. Try questions on this. Try more questions. So I have one more question here. This one we have solved it. It's the same thing. 1.2 now, there's 600, the same thing. So I have one more question here. Illustration 1. Okay, T-sum limited. Now this particular question, I've also attached the solution to it. So in case you are solving, you guide yourself. Just guide yourself, but try your best to solve it. Here's the question. For those that are snapping, then this is the other part of the question. Okay, then here are the solution. This is the solution. This is the end of the solution. Okay. All right, ladies and gentlemen, I remain Dr. President. Thank you for your time and thank you for staying